Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1694th edition of Short-Term Trading Live with Oscar. Good evening, traders. This 1694th edition of these educational videos in the art of technical analysis is coming at you on a Sunday night for Trading Sunday through Monday. That is November 13th, 2017. Traders, you must know, and if you do not, you should. Futures trading is extremely risky, causes substantial financial loss, is not suitable by all traders or for all traders. If you do not understand the risks behind trading, you certainly should not trade. Put your stops in, put them in first. Don't worry about slippage. Place your stops. They will act as your best friend when things go wrong. So, what do we have here? Traders, Dow Jones Transportation Average Daily Bar, and this is for Monday, 11/13, and all I can say is I have got a red Omni in the U.S. indices, S&P, NASDAQ, Transportation Average Dow. I don't necessarily understand it, but I never interfere with the Omni call. Omni says we go down. It's a red Omni. I make the call. That's what I'm doing now. So without my interference, I will just show you this. We've got a red Omni in the S&P, and we will probably be selling rallies in the S&P and or NASDAQ for Monday. And here is your Dow Jones Transportation Average. And it has seriously been starting to lean on the markets, and it is starting to pull the markets down. Even the S&P and NASDAQ in the last 2 days are starting to feel the weight of the transportation average nosediving. So let's take a better look at this chart. Is this a bull flag that's failing? Well, let's go back a little bit. History is what makes going forward possible in analysis. Was this a bull flag that failed? And when it failed, where did it go to? The 200 bar moving average. So I have to ask, will this be another trip to the 200 bar moving average? It looks like that's where it's going. Now, it bounced off, rallied up, came back down, and went underneath it again. We still have some decent dip just to get down to it and see what it wants to do there. So I'm assuming this is just another trip down to the 200 moving average where it'll hit it and ricochet out at some point. I am not saying the top is in any market at all whatsoever. Do not misconstrue. But a pullback on Monday is likely because of this pattern right here. So I think they're kind of repetitive patterns. This one doesn't look exactly like that one. I get it, but it's close. It's sort of the same pattern, just a little smaller. And when it broke, it nosedived to the 200. It broke, and it's nosediving to the 200. That is just logic, right? So simple layman's analysis, logic behind what I'm seeing. This is clearly something that you can see is repeating. So that's what I'm expecting Omni is getting its red Omni from for trading on Monday, because I don't know that I would be selling anything if it were up to me. But listen, I just follow what Omni says. I do not interfere. It is much better than I am. I've got human emotions. The Omni is a methodical approach. Let's follow it. Let's move on. So that's why we will be selling either NASDAQ and or S&P for trading on Monday. Very nimble, and we'll jump out as quickly as we can. Now, let's talk about commodities. Let's talk about something very interesting. Look at this dollar index chart. Now, any Omniac who's visited my chat room knows I have been showing this for weeks on end. I don't know that I even bothered to debut this in a video, but I absolutely showed this to my chat room weeks ago before the handle was formed. We had no handle at the time. And I said, kids, this is a cup. And if it forms a handle, we better start paying attention to it. Lo and behold, the handle formed, and the market's starting to move higher. Now, this is the dollar index. The dollar index is exactly opposite weighted commodities, right? If dollars are going up, the likelihood is that commodities are going down, right? If one's going up, the other's going down. So that's usually a strong dollar starts to put weight on commodities like the like the grains and the metals, things of that nature. So with that in mind, I did say to my chat room, I do not call the cup and handle very often. We had no handle at the time, just the cup. But I did call this a few weeks ago, and now it's time I think we ought to start paying attention. That's after the handle was formed. So my chat room knows well, all well about this cup and handle. Again, I'm not sure if I put it in videos lately or not. So we've been watching this. While we've been watching this, it started to make me go after short euro trades, and it started to make me go after short gold trades. Now, gold is in a very interesting case here, and I actually want to show you this gold trade because if you want to find an interesting trade, watch this. So cup and handle in the dollar shows the dollar is bullish, means it should be bearish on commodities if dollar is bullish. Now, gold is a commodity, as is crude, and we're not going to get into the crude oil in this video, but maybe I'll do a video where I'm in front of the camera tomorrow. We need to discuss crude. Do not fall in love with too much more of the upside of crude. You'll see. We'll deal with that in the next video, okay? Just don't go crazy. Yes, crude may go up a little. Don't go crazy. I'll show you why in another video. Anyway, dollar index weighs on things like gold if it's going to go up, and this looks like a pretty bullish formation right here. So if it's going to weigh on gold, which I think it will, let me show you what that gold chart looks like. And this is an interesting chart. Gold, daily bar. Now, if you have been watching my videos, we have been bouncing between no bear flag because it's holding the 200 bar moving average, back to yes bear flag because now it's hitting the top of my bear flag, so I put it back in. So I basically, when it hits the bottom of the 200 bar moving average and it bounces, I go, okay, maybe the flag goes on what I like to call temporary hold. So bear flag goes on temporary hold, and we buy the dips once it hits the 200. So we are not at the 200. We just started to drop from the top of this bear flag, and I expect it to get down here again, if not penetrate the 200. So we are going to take the temporary hold off of the bear flag and put it on the fact that the 200 bar average is holding. And I'm going to look at this in more than one way. If this is the bear flag, we're under it already, but we're not below the 200 bar moving average, so you still got a fight going on, right? Between which one of these should have the red line on it, basically. So, are we going to say let's ignore the 200-day moving average for today as day traders? Or are we going to put the bear flag on temporary hold? For Monday, bear flag comes into play, 200 bar moving average will go on temporary hold. Two looks. Here's one, but here's a very interesting other look to this bear flag. Watch this. Let's change that to a black one. Let's say this whole thing is the bear flag. Monstrous, big. Well, the same thing happened. We've bounced off the top of it, and now we're heading back towards the bottom of it. In any event, you should at least get one more down day out of gold till you hit the bottom of the flag, touch the 200 bar, and the Omni happens to be, of course, red and gold for trading on Monday. So, good reasoning using formations. Better reasoning, forget the formations. I've got an Omni that says, don't worry about it, flag or no flag, it's in the direction of the flag. I've got a red Omni. So if I've got a red Omni and a bear flag, I am loving it. We will take the sell trade in gold for trading on Monday. And here's another very interesting chart which I think we should look at together. And that is OLED, Universal Display. When we debuted OLED, we had just gotten an Omni buy signal right about here. Now, if you look at the price, we were somewhere in the 140s, breaking into the 150s. This thing is at 175, which was my projection. If you recall in the videos, if you look back in the last few videos, I projected 175. Omni has higher projections for Universal. And a round of applause for Omni sniffing that one out. That was a fantastic play. Omni has higher projections, and whether or not the transportation average and the emini S&P and the NASDAQ want to go down on Monday, this bad boy wants to go up, and we will be buying OLED for trading on Monday. So interesting, right? We're buying a stock, even though we're likely going to be trying to short the indices, but that's the way the Omni plays, and I will not interfere, and I vow to never interfere with the Omni. You will not hear me interfere with this Omni. It is what it is. Omni green for OLED, Omni red for emini S&P, Omni red for gold. If we get a rally, we'll sell into it. That's all for trading on the 13th of November. Traders, come join me in my free live trading room. That's where I live and breathe. You will always find me there, and it costs you nothing to hang out with me all day and night. That's at livewithoscar.com. And remember, keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll traders, I will see you all at livewithoscar.com.